Hello and welcome to another update video on Bitcoin. Last week around the same time, I recorded an exclusive video for you guys here, and I mentioned the parameters for the last week. And let's do a bit of a recap around or about these parameters. When we cover these parameters, it's important to understand that there are support and resistance levels. And last weekend, we saw the market prepare for, or it was early on Monday, we saw the market prepare for some further downside. And I mentioned specifically this area around 98.5K as target and critical support area because the market was dancing on the 55-week exponential moving average. So this was happening all week, right? So we talked about this support level, this area as key support, and it was relevant, as you can see. Throughout the entire week, we saw the level tested again and again. And it wasn't any technical level. This was indeed the 55-week EMA, in my opinion, the most relevant exponential moving average. There was no break below it, no break below it. It wasn't the June low that was relevant here. Well, it was, but in terms of actually what the market cared about, that was the 55-week exponential moving average. I'm not talking about the 50-week SMA or the 50-week EMA. I'm talking about the 55. The difference isn't massive, but some of the other ones, like the 50, I think got broken briefly. And so some people even flipped bearish because it got broken. Even though, as I said before, should we break below the 55, which is currently around 99K here, a bit higher than that, it wouldn't be bearish until we get a decisive break, and I would say at least a weekly candle close. Now, this week, we avoided a weekly candle close. So what I want to say is last week we talked about the parameters. Support parameters were tested, reached, tested. Market spent all week respecting these parameters, and now we have a bounce. And so the first resistance area that we discussed all week, is broken. In a bullish market, resistances break. That's completely normal. And as said before, I don't have any evidence that we're already in a bear market. So resistances should be broken in a bear market. Resistances should be broken in a bull market. And in a bear market, we should break below support levels. So for now, we have broken resistance, first resistance, which was here basically around these previous swing lows from July, October, and so on. And these were, structural support levels and then structural resistance around 105K. But actually the $105,000 level that we talked about all week, that was a Fibonacci resistance. And that was an important level because it kind of was the level where we said it needs to stay below to keep following an impulsive decline. The good news is that we don't have an impulsive decline anymore. This is good because my overall thesis is still for another high. I am not yet overall bearish, as you know. So I'm still cautiously looking for higher prices or higher price opportunities or setups for higher prices. So it's actually exactly what we want. Whether this is now the trend change or not, we don't know that yet. It is a good sign that the decline is not impulsive, because it's, if this is, for example, the yellow scenario or the orange scenario, and this is just a corrective bounce in yellow or even here in the B wave, then this is currently only it's a corrective bounce basically. But it's part of a diagonal structure to the downside. And if we have a diagonal structure to the downside, the bears are not clearly winning. If this was an impulse down, which it looked like early last week, it would be more clearly bearish. So that's actually pretty good and fully in line with the overall thesis. Most importantly, the bounce, which is quite high now, has the chance to develop into a trend change to the upside. The first step for that was a break above 105K, but that's of course not enough, because the break above 105K only led to a break of initial resistance. But what is more important than that is that we now get a break above the upper resistance. Previously I called it upper resistance. It's between 109,400 and 112,400. Because if this is a diagonal structure to the downside, for example, wave 1, wave 2, A, B, C in wave 3, then wave 4, then wave 5, you know that scenario. Then the B wave, while it could break above 112,400, a decisive break above would shift the focus towards a larger recovery, possibly even a rally to all-time highs. But it is too early to confirm that. The move to the upside from the lows is still a 3-wave move up, still looks corrective. So this could develop into something more bullish, like in the white scenario. Yeah, this wave 4 never disappeared. This could develop into something more bullish. For now, I still wouldn't be surprised by another low. So I think for now, the support area that we need to track right now, this is not necessarily support for the week. It depends on how high we push. But I will give you a micro support zone. As long as this support zone is holding, the market could extend higher. Whether that is in a broader B wave, for example, an A, B, C structure, yeah, or maybe we even break out 1, 2, 3, 4, 5 in some kind of an upside diagonal pattern. It's not so important here from a daily chart point of view. This would be the zone, and this will have to be adjusted until we actually form a local top. It's currently between 100,586 and 103,750. In other words, as long as the market respects $100,540 over the coming days, the market has a chance to go higher. Yeah, it will of course depend a little bit on the stock market as well. I can see this happen, for example, A, B, C. There is enough room and it could still grind into resistance like this, similar to what we did here after the 17th of October low, A, B, C. So I'm just very much aware of that. Yeah. So this would be the support area that we can track here on the daily over the coming sessions. And I'll get back to that. So that's basically it. That gives you the parameters for the coming sessions. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. Thanks so much. Bye-bye.